Hey everyone, can you guys hear me? We've been having a couple of minor technical issues, so thank you for bearing with us. I can't see you, so I just want to make sure that you can hear and see me. And if you can, please just go into the chat and let us know that you can hear and see me before I get started. Hmm. All right. Anyone who's on the Bigger Pockets team, can you tell me if this is working? Because I don't see anything. I'm going to take these on. Okay, well, hopefully you guys can all hear me and see me. It sounds like the Bigger Pockets team said we can. So we are here and ready to do
What
this
knocks
thing.
people out is
If
the
you
risk of
guys
road.
don't know me, my name is Dave Meyer. I'm the Vice
realize-
President of Data and Analytics here at BiggerPockets, and I have been investing in real estate for over 13 years now, mostly in rental properties. I also have one lonely short-term rental, small multifamily, large multifamily. And today, what I'm going to do is talk to you about one of my favorite subjects of all time and in all of real estate, which is how to analyze real estate deals. We're going to just do this live. Actually, our community manager, my friend Noah Bacon, found a deal on the BiggerPockets website. We're actually just going to do this live. I'm going to show you how I process these types of deals like relatively quickly. I'm actually going to take you through 3 different steps. So what we're going to do is we're going to start sort of at the highest step that you possibly can, which is basically, macroeconomics. What's going on in the broad context of the market? Then we're going to drill down a little bit further and say in this area, and just so you guys know, we're going to do a deal in Houston, Texas. So in Houston, not just what's going on sort of on a macroeconomic scale, but what's going on in the housing market in that area, because that's going to inform all sorts of different things about how we want to bid and basically what the prospects of this deal are. And then we're going to get into the nitty gritty of the deal and really calculate the numbers, like figure out what our cash on cash return might be, what our ROI might be, how, if you held this for 5, 10, 15 years, how much money and what your expected return might be. So that is what we're going to get into today. And you'll see, I think, over the course of this video, of this live, that you could do this in like 10 or 15 minutes if you get good at it and you have the right tools. And I'm going to show you a couple of different tools that I personally use to analyze deals, and also tell you how you can access these deals as well. So before we do, I just wanted to let you know that we have this very complicated system going on where I'm giving a presentation, but Noah is going to help feed me any questions that you have. So if you have questions through the course of this video, make sure to just pop them into the comments there on YouTube Live, and Noah's going to let me know when we get them. I'm probably not going to answer all of them right away, but definitely stick around to the end, because after I've done sort of the deal analysis and we look at this deal in Houston together, I will stick around and answer questions for people just as you have them. So make sure to go into that. All right. So just so you know, like hopefully if there's any tech glitches, just let us know. We had a couple of issues getting started, so we appreciate your patience. But let's jump into this. Let's just first look at this deal. So we picked this deal in Houston, Texas, and I just liked it at face value for a few reasons. First of all, I love small multifamily deals. It's my personal favorite asset class to invest in real estate. And this one is a duplex, which qualifies as a small multifamily. I love small multifamily because it allows you to take advantage of residential financing. Anything that's 4 units or below, you can get better interest rates, you can put less money down. And so that's one of the reasons I love it. I also actually I'm a partner in a multifamily deal in Houston, so I know a little bit about Houston. So I thought this would be a good one to do. So let's just look at some pictures here. We can check it out. You can see that it's like a side-by-side duplex, nice green color here. Oh, solid backyard. And if you look at some of these pictures, you can see the kitchen. It's pretty nice. It's not like run down and maybe a little bit dated, but still definitely in quality living condition. Like when I'm looking at these pictures, some of the things that are going through my head are like, could I rent it out today and make money? Or does this sort of deal, this property in particular, require an immediate renovation before I could, generate the types of rents that I think are possible at this location? Now, one thing to note that I'm seeing here is that this property is already rented out. So we have both of them are currently occupied at $1,600 per month per unit. And if that's what it's renting for, it seems pretty nice. One of the things I'll look at in a couple of minutes is if we were to renovate this, and again, it doesn't seem like it needs a lot of work, but maybe if you made some cosmetic upgrades, could you maybe get that rent up to $1,800 a month or $2,000 a month based on what's going on in the market? Now, one thing I'm looking at in this picture, we won't get too far into this, but if you look at this, oh, guys, I'm sorry. I think that we're having an issue with the screen share. I'm just getting a notice. Hold on one sec. I'm going to try this again. I told you guys you're going to have to be patient with us today. It's just one of those days, where every tech problem seems to be going on. And honestly, we haven't done on BiggerPockets, we haven't done a YouTube live in, I think, like 4 or 5 years. So this does seem, bear with us, but I think we're getting it on there. All right. So I just restarted it. It looks like we're going. So I'll just show you these pictures again. We got this nice green duplex here. We got this beautiful backyard. I was talking about this kitchen and how it does look nice. Like everything looks great. It's not super modern, but it does seem like a nice place to live. The one thing I did notice here that, I'm just showing you how to analyze deals here today, but if I were actually considering buying this deal, if you look on the ceiling here, right above these beds, you see maybe some evidence of water damage or even potentially some mold there. That's definitely something you're going to want to look at. But overall, I think the place looks reasonably solid for us to analyze these deals. So once I've looked at this and decided, this place is worthy of further consideration, like I said in the beginning, I like to sort of treat it like a funnel. You start at the broadest possible analysis and then you narrow down and narrow down. So to me, the broadest possible analysis is sort of a macroeconomic look at Houston, Texas. And I know that macroeconomics sounds scary to people, but basically we're just going to look at a couple key data points that are honestly really easy to understand. I just switched my screen to something called Miro, and you should see a lot of really intimidating looking charts here. So if you do, everything's going right. So let me just see. Hopefully, Noah, let me know if we can see it. All right. So what we have here on the left, this is the first stage. This is economic data. And what I'm looking for here, because so much of real estate comes down to like the direction that prices go, the direction that your rents go, really come down to supply and demand, just like pretty much everything in a market economy. You want to see, are there going to be a lot of people who want the product that I am buying? So in this scenario, we need to say for this particular property in Houston, are a lot of people going to want to buy it in the future when I go to sell it? And a lot of people going to live there. And the couple things that I really like to look for, there's more, but the 3 things that I usually look at first are, one, it's just population. Is the population of this city growing? Because that is a good indicator of future demand. If a lot of people are moving to the area or, there's a high birth rate or demographics favor a lot of rental properties, those are all things that you should look at. And what I have here in this first chart compares the resident population in Houston, its annual growth rate, that's the blue line. And below that is the same data, population growth, but for the entire United States. And so what you can see here is that in Houston, resident population is growing significantly faster than the rest of the US. Check. That is very good for Houston. Let's move on to our next data point, which is the unemployment rate. We obviously, in anywhere you make an economic investment, you want to see that the economy is strong. And although unemployment rate, as a metric does have its pros and cons, but it is a good indicator of what's going on in the economy. And again, what you see here is that, yes, it's spiked up at the top of the pandemic and then has come back down. But something that I notice here that I think everyone should pay attention to is that the unemployment rate, although very low, it's still like 3.5%, is actually higher than the national average. Because the national average here is blue. I think those lines switch colors. Sorry about that. But what you can see here is that in Houston, it's a little bit higher. And so, again, not super concerning, but something to think about when you're analyzing this deal. Moving on to the third one is hourly wages. Because yes, it's good to have a population that is employed, but if if wages aren't going up, if people aren't making more money, that will restrict property value growth, that will restrict rent growth. And what you can see here, again, sort of jives with what we were looking at in the previous chart and tells us that yes, wages are going up in terms of average hourly earnings for all employees in the private sector in Houston. They're going up, but they're going up less than the US average. That's not what it was from 2007, as you can see, up until 2018, 2019, before the pandemic. It was above average. Now it's been below average for the last couple of years. Again, it's not necessarily something that would make or break a deal. But when we get to the point when we're figuring out what we would offer on the deal, these are the things that you need to keep in the back of your mind that, yes, the market population is growing, but there is some potential weaknesses, some things that you need to think about for Houston if you're going to invest there. So that was step one, just sort of looking at the broad market of Houston and what's going on. But obviously, these economic indicators don't tell us everything that we need to know about this deal. We also need to drill down to step two, which is housing market data. And so this is probably stuff you're already familiar with, but this is things like the median sale price. And as you can see here, prices in Houston did go down over the last couple months, but are coming back up. So that's what this chart is here on the left that I'm highlighting. But if you move over here to the chart on the right, I think this tells a more accurate story or a more vivid story because it shows you the year over year change. And in the housing market, when you're looking at deals, this is what you really care about because sales price in the housing market, sales market and sale prices are seasonal. So they go up and down, all the time. And what you want to know is like in July of 2023, was it higher or lower than it was in July of 2022? And so that's what we can see here. And this tells a really interesting story. It shows us that during the pandemic, of course, year over year price growth went insane, above 15%, almost 20%, or over 20% for at least 1 month. And then it has just come rapidly down to earth. But it's not in a free fall. We're seeing that for the last 5 or 6 months, Houston sale prices have been, -2, -3%, and they've sort of flattened out there. This is notable because in a lot of other areas in the country that I analyzed, the median sale price has started to go back up again, but not in Houston. It's staying sort of flat it's staying at a negative growth rate right now. Again, doesn't mean you can't offer on it, but it's something to think about, which we'll talk about when we get to the actual deal analysis in just like 2 minutes. So next things I want to look at is inventory. Inventory helps us really understand, are you in a buyer's market or are you in a seller's market? And that, it sounds like it's just like sort of this naming thing, but it actually really matters because if you're in a buyer's market, it means that there's a lot of inventory on the market and buyers generally have the power. That's what we mean when we're saying a buyer's market, because there's a lot of, that's when who has the leverage in a negotiation. And so what we see here is that the inventory in Houston has gone up a lot since its pandemic lows, but it has not yet gotten to the point where it was pre-pandemic. But this, shows that housing price, inventory is going up, and it's probably more of a balanced market. I look at this kind of stuff all the time, and most of the markets I see in the country right now have inventory actually lower than this relative to pre-pandemic levels. So this is a more healthy level for Houston, which is not a bad thing. I'm going to skip down to these last two things here because I think these are really important. Because when we talk about Houston and what, any individual market, we want to think like, if I like this deal, we're going to analyze it in just a minute. But if I like this deal, do I have to bid over asking? That's what was going on for years, right? Or can I bid under asking? Who has the power in this negotiation? And so when we see median days on market, when the median days on market are high, buyers have the power. When it's low, sellers have the power. And so what we see here is that it has been moving back towards a seller's market in Houston because days on market are about 25 days, which is low in a historical context, but way higher than it's been over the last few years. And then I am saving the best for last with these charts. So this last one is one you may not have heard of before. This is sort of a data metric that people don't really talk about. I don't get why, because it's so useful. This might be the most useful one out of all the ones I've shown you. This is the average sale to list percentage. So when someone goes to sell a property, they and their agent, they come up with a price, let's call it $500,000. But not everyone necessarily is going to buy for that price. And this metric shows what percentage of that asking price it actually gets bought for. So if it was, for example, if it was instead of $500,000, you would get $505,000. That would be selling for 101% of the asking price, right? It was 1% over asking price. Or if it went for $495,000, that would be 99% of asking price. Hopefully you see why this is useful, right? Because if you look at this green line in Houston, you can see that the average sale to list percentage is only about 98%. And that for investors might be a good thing, because that means on average, even homeowners, not necessarily investors who are going to negotiate as hard as you and I are, 2% under asking price. So that's already putting in my head when I analyze this deal that even though they're going to ask for whatever they ask for, I might be able to not necessarily lowball them, but the value, the real market value of properties in Houston right now is on average 2% lower is asking for. So that is something I'm definitely going to keep in my mind when we analyze this deal. So those are the first two steps. First, we looked at this macroeconomic situation. Then we moved on to this housing market data. But now let's get to these deals. Oh, before we do, actually, sorry. Let me just say where I got this data. So these tools. So the macroeconomic data I got from a website called Fred. It's the Federal Reserve Bank of St. Louis. And they have all of this government data. They aggregate it, and it's super easy to find all of this data. The housing market data, I just pulled from Redfin. You can see it right here. They have an amazing data center. You can just Google Redfin Data Center. It's entirely free, but also Zillow, Realtor.com, they have this kind of data. So if you want to get this type of information for analyzing your own deals, you can get most of these for free. For our third step of the deal analysis, we're going to go to BiggerPockets.com and use one of the tools that we have there on BiggerPockets.com. It is called our rental property calculator. And what you're going to do, if you want to follow along, you can actually analyze a deal alongside me right now if you want to. You can just go to Tools. You do need a BiggerPockets account, so you can sign up for free and try it right now. But if you want to, you can go to rental property calculator. That's where I'm at right now, and just hit start a rental report. So I'm going to show you, I think that this is the place where a lot of people who want to become real estate investors get hung up because they don't know if this is a good deal or not. We just saw some interesting information about Houston. We saw population is growing, housing prices are down a little bit. But really, at the end of the day, what we want to know is this going to make me money? Is this a better use of my hard-earned savings than putting it in the stock market or putting it in the bond market or spending it on something fun? So that's what we're going to learn here during this deal analysis. We're going to see, is this deal actually worth it? So the first step in doing this is just putting in the property address. I'm literally just going to copy and paste this. You could do this for any deal that you want to. And in the BiggerPockets calculator, it should auto-populate so you can see exactly the address. So there we go. I like to add photos. I do a lot of deal analysis, and honestly, I forget the addresses, and I just remember, it's easier for me to remember them when I look at them. So I just add one. It's the green duplex in Houston. Now I can remember it. If you want, if you want to, you can add more photos. I'm just trying to do this relatively quickly to show you guys how this works. So that's the first step. All we needed to do is add in the property information. But if we want to put in more information, like 4-bedroom, 2-bath, you can do more. So you could do that. This analysis, just so you know, is going to do one side of the property, and then we're going to double it. So I'll just show you how we're going to do that. So next, we just move on to the purchase. Purchase price here is $360,000. Now, if you were watching a minute ago, maybe we're going to offer less than 360,000, but we're going to get to that in just a minute. Let's first, we're just trying to explore this deal a little bit. Let's first understand if at the purchase price, it's a good deal. So we're going to put in 360,000. Next, for our closing costs, I'm going to estimate about 6,000 bucks. And the way I know that is I've bought a lot of real estate, so I have a good idea. But if you are doing this deal analysis yourself and you don't know what purchase closing costs or really anything else in the calculator are, just click on these help buttons over here. So it shows, like, for example, typical closing costs are around 1 to 2% of purchase price. If unsure, 1.5%. So 1.5% of 36, that would be 5,400. I'm going to estimate up. Let's just say it's 6,000. Okay. Then what do you guys think? Should we do a rehab? Let's actually not do a rehab, and then we'll come back and see what a rehab is afterwards. So let's not do a rehab. And then we could come and look at property value growth. So this is where you decide, is the value of the property going to go up? Not because I've improved it, but just because of market forces, appreciation, inflation, that kind of thing. And over the last few years, we've seen crazy levels of property value growth, like 10, 15%. But the average is honestly 2 to 3%. And personally, given where we are in the economy, I think it is best to be really conservative with this. So I'm going to do 2%. That's the low end of what the average is. And so I'm going to just keep it there because right now, economy is uncertain. And if I'm going to make an investment, which I have been during this uncertain economy, I just want to make sure that, even if low growth continues right now, that I'm going to be okay. So I'm going to put in 2%. Next, we're going to do loan details. And if you're an investor, usually you put 25% down. So that comes out to $90,000. And the interest rate right now is about 7%. I actually looked right before this just to see it was at 7. It was like right at 7%. Obviously, if you want to do that, if you need a quote, like this is just the average, you need to talk to a mortgage lender to see what your quote would be. And you can actually find those on BiggerPockets. There's plenty of places. You can just go to biggerpockets.com/lender and you can get matched with a lender completely for free. All right, I'm talking a lot. I need a drink. All right, so loan term, 30 years. That's, in my opinion, the best thing to do for a deal like this. And so we're moving on. Guys, this is like I know it seems like I'm entering a lot of things. We're almost done. We've just put in property information, purchase, loan details. Now we go into rent income. All right, so what we see here is the BiggerPockets calculator has actually already brought in the median rent for this property at $1,500 per month. And it says what the confidence is. So that, again, this is just for one side of the property, right? And so we're going to have to double that to 3,000. But first, I just want to show you this tool because it's something I think you might find use in. When you're analyzing deals, I find that one of the most challenging things to figure out is what will a property rent for? On BiggerPockets, you can check out this rent estimator and it will show you not just what it estimates the rent to be, which is $1,500, but it'll tell you how confident it is. Like, are there a lot of similar properties nearby that we can base this estimate off of? If not, it will just tell you that it's not good confidence and you can call property managers or go on a listing website and trying to figure out rent. But for this one, luckily for one side of this, remember, this is just 4-bed, 2-bath. The whole property is 8-bed, 4-bath. We're looking at very high confidence. So it's, I think, about $1,500, but you can also just scroll around here and see the different comps in the area. So you see, there's actually one that's $2,400, a 4-bed, 2-bath, which is interesting because remember earlier, I was saying like, maybe we do want to renovate it. I don't know. Maybe this one on 4512 Brinkley is renovated and we could actually get our rents from about $1,500 up to $2,400. On the other hand, some of them are cheaper. These are smaller though. Look at them. So they're 3-bed, 2-bath. So you can really sort of narrow down and start to understand the picture of rent in your neighborhood. But let's go back to the calculator. So for this one, it says $1,500, but remember, this property is actually rented out right now. So current rent is $1,600. So I'm going to put in 3,200 because that's 1,600 by 2. Sorry, 3,200. And go from there. So it actually shows that the rent estimate from BiggerPockets was pretty close, 1,500 versus 1,600. And we can do that and we can move on. So next, let's go on to expenses. And we got to see what property taxes are here. So sometimes they just put this in the listing. Let's just see if they put in a listing for us. They did not. Let's just see if we can Google it. Sometimes you can't. Let's just try it. Property taxes. I know property taxes in Texas are crazy. I don't know if any of you guys are from Texas, but man, you don't have income tax, so that certainly helps. But it's crazy that there is no income tax there. All right, let me just see. Zillow sometimes has it. Price and tax history. Tax. Here we go. 6518. All right. So now we're moving on along. So we go back here. We go to 6518, and then we go to insurance. This one's a little bit harder, but again, I usually just Google it. So let's just say average. We're going to Google average home insurance, Houston, Texas, duplex. Let's just see if we can get that good. And guys, if you are actually going to buy a property, like you should talk to a mortgage, a insurance broker. I do this because I'm trying to analyze deals quickly, and usually you're pretty close within like 5 or 10%. So it's really not that bad. Damn. Wow. Average home of homeowner insurance in Texas is 4142. That's a lot. Jeez. Let's see if that's all right. Money Geek says that 3722 yearly. All right. I'm going to put in 4,000. That's an average between the two of what I just saw. So we're going to do 4,000. So we have a lot of tax and insurance there. That is really high, 10,000 bucks. So repairs and maintenance, let's put in 5% here. Because I do think this property is going to let's just say 6%. I do think that this property is going to need some repairs and maintenance. Remember, I saw a little bit of evidence of water damage. It's an older house. Like it does look like it hasn't been updated. So I do think we're going to need some repairs and maintenance there. Vacancy, I always like to put 8%. That might be a little high for this neighborhood. We can check, but I do like to just make sure. Let's actually put 4% because it's a duplex, which means that you would have 1 month of vacancy per year for the whole building. So that's why I like that. Capital expenditures, I'm going to keep this low at 4%. Because I don't think we need to spend a lot of money unless we're going to do a renovation. And then I'm going to put in management fees because I don't live in Houston. And so I management fees. I personally, so we're almost done, guys, here. The last things here is when we just look at, when I look at utilities, I just usually have the tenants pay for it because it's their usage and I don't need to be involved in this. So I usually just put 0 for all of these things because tenants are going to handle those directly and we're done. That's it, guys. That's all it did. I'm rambling and talking here, and it probably, I probably could have done this in 2 or 3 minutes if I was just doing it. And hopefully if you all are analyzing deals, you see how easy this is. All you need to do now is hit finish analysis. And before I do it, I'm going to hide the results. I want to know if you guys think this is going to be a good deal. I know in my mind what I think is going to happen. I haven't seen the results, but I want to know, put it in the comments. Put it in the comments. Do you think this is going to be a good deal, a bad deal? Would you buy it just based on what you know so far? All right. I'll tell you what I think. Ready? I think it's going to have negative cash flow. Okay, it did. All right. So that one, I'm not surprised to see. It has negative cash flow at negative $176 per month. The cash on cash return is negative 2.2%. So as is, given the way that we've input our information into the calculators so far, I would not buy this deal, obviously. I don't want to lose money on a rental property. But I want to show you a couple things here as we've talked about. One, we already said that perhaps we could get this property for 2% cheaper, maybe even more. Like 2% is the average. So let's just see what happens if we lower it. So 2% of 360,000 is 7,200. So we'd be looking at like 35, like right around here would be 2% less. So let's see what happens here. Okay, it's got a little better. Our cash on cash return went from negative 2.2 to negative 1.7. And why I'm doing this is because when you run and analyze a deal, a lot of times the first time you analyze it, it's not going to be right. but you have to make your deal. Like it's not, I was putting in a lot of different inputs, but if you're an investor, it's sort of your job to figure out how to make a deal work. And not every deal is going to work. This one might not, but there's some deals that are sort of close, right? Like imagine that this came out at 3 or 4% cash on cash return. You're like, okay, now I can tinker with some of the assumptions and ideas that I put in here, and we can get it to, let's say, a 7% cash on cash return, which to me might be a buy. So again, like looking at this, obviously 2% below this price is still not making this a good deal. Let's see if we just knocked it down, I don't know, 10%. That's getting you to about break even. To me, still not good enough. What about rent? Because we saw that one property that was $2,400 a month. If we could get $4,800 total, that would probably be a very good deal. I don't know if we could do that, but I just want to show you how the calculator works. Because let's just say it doesn't even go that high. Like if you could go to 4,600, your cash on cash return would be amazing. So that is one question. So right now, what I'm seeing is a deal that doesn't work, but I'm going to actually go back into this calculator and make one change because I had a feeling that we were going to need to do this, but I wanted to just show you how it worked as is. Let's imagine that we wanted to rehab this property. So we can just go use the same calculator. And what we're going to do is press this button here that says, I will be rehabbing this property. So let's just imagine, I'm going to make up numbers, guys. So don't take this too seriously. I'm just trying to show you how to do this. But let's just imagine, what do you think? We put in 30 grand. Let's say we can put in 30 grand to fix up this property. And by putting in that 30 grand, let's say that we increase the value of the property by 50 grand. And that's actually a very conservative estimate. This happens all the time. You see house flippers do this. They put in 30, they get out 60. They put in 50, they get out 100. This is the whole business of value add real estate investing. And so let's say that we get this up to 30 grand gets us 50 grand in ARV. That's the value of the home after we buy it. Then let's say that this increased property, instead of getting us $1,500 a month, let's say it gets us, I don't know, $1,900 a month. So instead of $3,200, let's say $3,800 here for the month. So nothing else changes because we've already done, because the expense side doesn't really change other than that 30 grand we're spending up front. Now let's update the analysis. Okay, so now we're talking. It's not a great deal still. We're still at a 3% cash on cash return, but we are at $300 a month of cash flow, which is pretty solid. And we're now kind of close. So I'm making up those numbers, but maybe that 30 grand, like what if that 30 grand got you $4,000 a month in rental income? Now you're at $4% ROI. What if you could put that in, but you tell the seller, listen, like this deal is not good as is. So I'll offer you $435 or $345, excuse me. Now we're at a 5% cash on cash return. So things are obviously looking better. Now you can get $500 a month, which is actually a pretty solid deal. Again, I'm making up these numbers, so I don't know if this is the exact way to do it, but hopefully you can see that the process here is you can use this calculator to tinker with your assumptions. And obviously you want to research your assumptions. You should know what rent is going to be. You should know what it would cost to upgrade that property, but using a tool like the BiggerPockets calculator will allow you to tinker and figure out what to offer. Because right now, you saw this listing, maybe you're thinking, oh, I have to offer 360. No, incorrect. But if you use this tool, you can now say, you know what? I'm going to offer, let's make this deal worth it for us. We're going to offer 335. And let's just presume, guys, again, assumption, presume that my idea about the rehab are correct, and that we'll take a 5.6% cash on cash return. So now you can say, I am going to offer 335 to the seller. Will they take it? I have no idea. But now you, as the investor, know, I won't go over 335 because it doesn't make sense to me. You don't have to get into this protracted negotiation with the seller being like 335, 345. You know in your mind that anything under 335 is a no deal for you because it just doesn't deliver a good enough return for the risk that you're taking, right? So that's why this is so valuable, knowing these numbers, because it gives you that confidence to make those offers. It also shows you, like, obviously cash on cash return is not everything. Like, it's important, but it's not everything. So if you scroll down here, you can also see that if you bought these properties, how much you would make over time. And it's just a super helpful thing to do. So one thing I'm going to save these changes for a second. And one thing I want to show you is if you hit this share button, you can download a PDF. And this is helpful for a few reasons. Like if you're a new investor and you want to get input on your analysis, it's really helpful. If you want to, talk to your significant other, your spouse about it, family member, great potential partners. But I think one of the other things that you can use this for is going to the seller, right? Because you're going to go to a seller, they want 360. They have in their mind that they want 360. You could print this out and show it to them at 360 and be like, I am not, at 360, I'm getting a negative return. Why would I sell that? And maybe they're going to be stubborn. Maybe they're not going to budge, but maybe they'll see that you're not trying to lowball them. You are trying to pay the market value that is worth it to you. And maybe that is 330, maybe that's 320. I don't know, but you can use these tools on the BiggerPockets calculator to help you negotiate with a potential seller. All right. So that's it, guys. We did it. So just as a recap, what we've done here is we went from the high level macro analysis. So we found out that Houston was a pretty good market, but given some of the economic things, I'm not banking on huge appreciation. And that's why I put 2% appreciation in the calculator here. I do think that there's an interesting opportunity because Houston is probably poised for long-term growth, but housing prices are a little bit suppressed. So I like the idea of trying to buy low in Houston right now. But this deal as it is not good. I think you would have to renovate it, and you would have to be able to jack up the rents by 20 or 30% by providing a better quality house. Like this house hasn't been updated in a while. So if you put in the effort, the time, the money to update it and can increase the market value of the rents, then it might be worth it. But that's really it. If not, move on to the next one. Like that is the beauty of being able to analyze these deals quickly, is that you can look at this deal, maybe it's a no-go. Maybe the next one's going to be a good one. So you have to look at a lot of deals. That's another thing I see a lot is people look at 5 deals and like, I didn't find one. 5 deals isn't going to cut it. You're going to need to look at 20 deals. You're going to look at 40 deals, 50 deals, a lot of them to be able to find the ones that are really going to be good and be able to move the needle for you financially. That's why it's really good to have these tools. Again, you can use Redfin, you can use Fred, and you can use the BiggerPockets calculators. So if you want access to the BiggerPockets calculator, like the one I've been using here, and the rent estimator, and all the other features of BiggerPockets Pro, that is a paid feature for BiggerPockets. But for watching this live video, we actually have a wonderful deal for you and can offer you 20% off the BiggerPockets calculators, BiggerPockets Pro, which includes the calculators. If you use the code LIVEDEAL, that's LIVEDEAL, that will get you 20% off. And honestly, BiggerPockets Pro is already a pretty good deal. It's $390 normally, so 20% off is going to get you down to $312. If you go and look at competitive products for all the value that you're offering for BiggerPockets Pro, they're literally thousands of dollars. And so getting the access to this tool that you can run and analyze deals and look at different rents, you can get landlord forms, you get access to our boot camps for $312 is an excellent deal. So if you want to do it, you can just go to biggerpockets.com/pro and use the code LIVEDEAL. That will get you 20% off. All right. Well, what questions do you have for me? I've done a lot of time talking, so I'm going to take a break and just take a sip of water and wait for some questions to come in. And I'm going to wait for Noah just for a second. All right. First question we got here. Is this information in Miro available to us? I don't have a good way to share that, but you can go find it for yourself for free, either on the Fred website or on Redfin for anyone. Second question, what's your bottom line for cash on cash ROI? I assume that means like, what's the lowest cash on cash return I would need to get? It really depends on the market and the market situation. So I personally don't prioritize, this is just me, and it sort of depends on the investor, but I personally don't prioritize cash flow as the number one thing. I want to find deals where I can build equity. which is basically, either improving the property like we talked about here, or a place where I think the value of the property is going to go up a lot. That said, I don't do deals with negative cash flow. I know certain people would consider that. But for me, even in a good market where there's going to be strong appreciation potential, or I'm going to be able to do value add and get a big chunk of equity out of the deal, I'd still need to see a bare minimum of like a 3% cash on cash return. And honestly, mostly like 5 or 6%. But that's me. Some people who prioritize cash flow, and maybe you want to retire earlier, you're close to your retirement date, you may want to get a cash on cash return that's more like a 7 or 8%, just because that's a better return on your money. But for me, I look for a more blended approach. And in these kind of market conditions, because it's a little bit riskier, I would probably maybe even jack up what my minimum cash on cash return is, just to give myself a little bit more cushion in case the market stays a little bit slow for the next couple of years. But good question. One more. Will loan details only apply to bank lenders, or can be applied for private money lenders? They should be able to be applied for private money lenders. It depends, if you have a private money lender who has some weird stipulations that are unusual, which happens but is not all that common, you might need something more customized. But I think this would work for the vast majority of most private lenders. Last question I have is, can this calculator be used for apartment complex purchases? Yeah, I don't see why it wouldn't be. You should just, the key is just to figure out what the rent is, right? So the one thing is, like, if you buy an apartment complex, let's say it's an 8-unit and they're all identical, it will be kind of easy because you just figure out what the rent is for one of them and multiply it by 8, and that's your monthly income. If you buy a thing with, a multifamily property with multiple layouts, you're just going to have to calculate the rent a little more carefully. So let's just say, for example, you buy an 8-unit and 4 of them are, 4-bed, 3-bath, huge units, and other ones are 4 studios. Like, you're just going to basically have to figure out what the rent is for those 4 large ones, multiply that by 4, find out what the rent is for the studios, multiply that by 4, and then add them together to make sure you have a total rent. But everything else really kind of works the same. All right. I think I am out of questions, but I'll stick around for one more second. I'm curious if any of you have thoughts on Houston as a market in general. I bought into a multifamily deal there, not in this part of Houston. I don't know. Let's see. Where is this in Houston? And it's doing quite well. So that's great. I've never really been to Houston, though. All right. Well, I'm not getting any more questions, but thank you all so much for joining me. This has been a lot of fun. Let us know in the comments, like, did you like this type of live deal analysis? We haven't done a live deal on YouTube in, honestly, years, but it's a lot of fun. Thank you for bearing with us during the technical difficulties that we had at the beginning there. But hopefully you guys learned a lot. I had a lot of fun doing this. If you have any questions, you can always hit me up on BiggerPockets or on Instagram, where I'm at the Data Deli. And again, if you guys want access to the tools I was using here to analyze deals like BiggerPockets Pro, just go to biggerpockets.com/pro and use the code LiveDeal, and you will get 20% off the first year of your Pro annual membership. I am Dave Meyer, and thank you all so much for watching, and I'll hopefully see you soon for another deal analysis. All right. I don't know if we're still going, but no, you can